Welcome back. Well, the SGX Nifty suggesting a bit of a pullback to kickstart trade. We're going to get a call on the markets as well as a couple of stock ideas from Chandan Taparia. But before that, just keep an eye on CG PA. In pre-open, you're seeing a large trade that's taken place out there. More than 0.5% equity has changed hands. So we'll try to get you further details. But CG PA, that's a stock, should be looking at massive volume, in this pre-open window that you get out there. So a few more details is what we'll get for you in just a bit. For the time being, as promised, Chandan Taparia joins us. Hi, Chandan. Morning. How would you approach the index? We're bracing for a 200-point downtake. And what are the stocks on your radar?
Good morning, Nigel. Thanks for having me. So if I look at the market setup, we have seen multiple barrier near to 17,777 marks. And these numbers are really working well as a major barrier in the market from last many months. And yesterday we opened positive but failed to surpass that same and drifted down from higher levels, and today we are opening down due to the weakness in the global market. What we notice that even after the strength in the market, we are witnessing dips as a buying opportunity, but global concerns are taking the limited or restricted upside in the Indian market. So that we need to keep in mind that because of that, your decline could be bought, but upside could be kept. So we need a reversal in the global market, then only the Nifty will head towards the new high territory or any momentum to surpass the key hurdle of 17,777. But as of now, for immediate point of view, we are closely watching the support of 17,442 marks. After the gap down opening, if market manages to respect this support, then we'll play the range between 17,442 to 17,666 and 17,777 marks. Now, if I look at the data setup, put call ratio slightly fallen down, but concern is from the FI's long short ratio that is again near to 20%. They are selling more, and that is the reason that market is having the restricted upside. And what if we have noticed that Bank Nifty slightly outperformed in last few days, but yesterday it was finding tough to surpass psychological 40,000 marks due to the call writing. So here I'll watch 38,888 as a major support in the Bank Nifty and 17,442 as a key support in the Nifty index. Now talking about sector and stocks, what we have noticed that from last few days when market is moving in a range, we are getting good attraction in selective sector and stock specific approach in the market. So we have positive view on cement, power and tire stocks, and we believe that all these 3-4 sectors are likely to outperform to generate the alpha in the market over the daily and the weekly basis. So first it is buy on Tata Power. This stock has given a breakout from a triangle formation which has the bullish implication if technical theory is concerned. Here we have given a consolidation breakout of last 18 weeks, 10% long addition seen in the last trading session, which clearly indicates that longs are adding the momentum to the counter. So recommending to buy on decline looking at the global market. So recommending to buy on decline with a stop loss of 230 and expecting it to head towards 250 level. Second trading idea, that is buy on ACC. We like ACC, Ambuja Cement, Grasim and India Cement. Most of the cement stocks are doing well. ACC has seen the built up of around 15% on the last day. That is clearly long built up. And here also we are witnessing the breakout from its ascending triangle and cup and handle formation, which has bullish implications. So 4 to 5% really cannot be ruled out, can be bought with a stop loss of 2 to 45 for an upside target towards 2400. Last trading ideas, that is sell side on Britannia. We have noticed that selective FMCG counter, I'm not talking about ITC. Apart from that, selective FMCG counter are witnessing some profit booking decline. Major trend is positive, but short-term negation is there. So profit booking could be seen. So Britannia is a counter where shorts are being built and upside is kept looking at the technical setup. So recommending to sell with a stop loss of 3760. And this stock can drip down towards major support of 3540 levels.
Okay, Chandan, have a great day. Thanks a lot for joining in. That is Motilal Oswal Financial Services with their views for the day in the F&O space. By the way, the pre-opening rates are not too bad actually. Given all the global mayhem, the market is down just about 100 odd points. Let's see how it goes. For now, it's not like a bloodbath or anything. It's just a shave off of 0.6%, little over 0.5%. Its IT stocks are under pressure. Tech Mahindra, HCL Tech, Infosys, TCS are all under a bit of pressure. Cement stocks a tad bit in the red. And some of these names, Shree Cement is actually down 3% in pre-opening. And then you have Eicher Motors, M&M, maybe some profit taking over there. But Deven Choksi is still with us. Deven, I wanted your thoughts on that Big Bang listing yesterday, Dream Folks. I understand that it's a niche space, this airport service aggregator platform. But there are still a lot of challenges with the business, right? The working capital, the balance sheet is under pressure. Do you think it was exaggerated, the move on the upside, or is it justified?
Yeah. So yeah, I think I think I like the business model per se, but I think the sustainability and the growth in the business model is something which I think I have not fully understood from the company, and I think because I think it's probably I think one of its kind of business. So I have not understood I think that part of it, how exactly I think this could be sustainable and grown eventually. Need to understand me more in detail, I must say. But the fact remains that I think this is a niche business model, and that's a reason for which I think some of the funds would probably like to have the stock in the portfolio. That could be one of the justification as far as I think the stock price and I think the demand for the stock in the market is concerned. But I would reserve my comment till the time I think we see the clarity as far as I think how this kind of activity sustains and growth is produced. I think till that point of time I understand, I would like to reserve my comment.
Fair enough. Deven, before we let you go, just a word on either Suzlon or Dish TV. Any one of these two stocks that you would want to take a punt on?
Suzlon has always remained, I think, one of the most promising company, except for the fact that I think they were little ahead of time, if I may put it that way. And probably I think the policy regulations hurt them, I think, more than anything else, and the financial mismanagement thereafter to follow. But now having seen those part of the worst scenario in them, and I think the better scenario is now emerging for the company after the restructuring. So probably I think one could argue that given the kind of demand for green energy and given the kind of demand for green hydrogen in particular, I think the companies which are into the solar manufacture, the wind power along with the solar, probably I think they would remain in demand. And I think the more important part that we are likely to see, as we have seen in the places like Netherlands and others, we are going to have, I think, more amount of offshore windmills coming up, and that is where I think the velocity and the generation of the power would be on a higher side, and that could be, I think, a stronger scenario coming in for the demand as far as I think the wind power is concerned. And having seen the company going in the hands of stronger financial promoter, possibly, I think you could see, I think, the better times going forward for this business. So let's hope and see. But no punting at this point of time, Anuj. I must say, I think, as far as the stock is concerned, we remain confident, but I think don't put money into it at this point of time.
Okay, Deven, thanks a lot for joining in. Have a great day. The market has settled about 100 points lower, 118 points lower. One space that has been in focus for the last few days is the tyre stocks. They've been surging. Fiat, Apollo sitting at fresh 52-week high. JK Tyres is, I think, just 10% away from the high. There are several factors supporting tyre makers, including solid auto demand, cooling commodity prices, and the premiumization move. Ashwin Patil, the research analyst at LKP Securities, joins us now. Ashwin, good morning. Is the risk reward still favorable for long-term investors in the tyre space? Ashwin, you're on mute.
Yeah, sorry.
Go ahead.
I think most of the tire stocks have hit their their 52-week high, I would say, but there is still some steam left because we know that the RM prices, like the crude oil prices, are softening up to a good level, and also the natural rubber prices are also, they have also not risen a bit too much in the recent past. Also the auto demand, as you mentioned earlier, is going quite robust in all the spaces where they cater to, like the PV two-wheelers and the commercial vehicles. So I think there is there is a reason why these stocks have gone up, and I think there is still some steam left in some of the stocks going forward. So one needs to be there in the tire space if they have already bought it. But to buy from these levels, they will get an upside close to about 10 to 15% at least.
All right. Hi, Ashwin. Morning. But what would be your preference in the pack then? You're talking about 10 to 15% return from here on. Stocks have already seen a good recovery from the lows. Preference of these tire stocks?
I like CEAT in the tire space with the target close to about 1650. It has already risen. It is already close to our earlier target of 1500. We are bullish even further on the stock because it is catering to all the three sectors, and it is one of the top three companies in the tire space. And its financials are also getting better, and also on the export markets it is doing well. It has expanded its coverage, distribution, as well as its business in the export markets of Europe. Definitely there is some sort of slowdown in Europe which will affect the other tire makers like Apollo and Balakrishna Industries up to some extent, because they have a larger focus on the European markets. But CEAT is a small player over there, and it is more focused on the domestic markets. So the domestic, we are expecting some good revival in the rural markets as well because of good monsoons and better spread at this point in time than the earlier months. So the auto demand is expected to do well, and therefore CIAT and the other tire makers, like the tire sector, I would say in totality, expected to do well.
Got that. Ashwin, good morning. Since you referred to Balkrishna, that's been the only stock which has underperformed, right, and big time. Is it because of just the global nature or something else? And what's your view on the stock?
Yeah, I am positive on the stock, but definitely there is a lot of pressure because about 50% of its top line is coming from the European markets, which is facing the music at this point in time. So Balkrishna Industries is the tire company, the only tire company which is having so much of exposure to the European markets, where there is a lot of slowdown at this point in time. So I think that that's the only thing which is hurting them at this point in time. But surely it is a good company, and this time also should pass away.
Okay, it's a good company. The other big trend that we're noticing since you spoke about Europe is what's happening in the two-wheeler space, right? Exports have been under a lot of pressure, not just in Europe, in Africa as well. And this morning, CLSA has downgraded Bajaj Auto. Would you be cautious on the two-wheelers because of what's happening in exports?
Two-wheelers as such, not on the overall sector, I would be cautious, but certain companies like Bajaj Auto, I would be cautious because Hero MotoCorp, you know that it's hardly present in the export markets, and therefore it is going to get the benefit from the positivity that we are seeing in the domestic markets. But yes, Bajaj Auto, about 50 to 60% of its top line or the volumes are coming from the export markets. Out of that, 50% is Africa, and out of that, 50% is Nigeria. So, about 15% of its top line is coming from Nigeria, where we are seeing a lot of pressure because of the currency depreciation, as well as the retail sales moving a bit down. So, Bajaj Auto is one of the stocks on which we would be cautious at this point in time. Earlier, before the Nigerian pressure was there, we were quite bullish on the stock, and definitely we are bullish on its domestic prospects, its new launches, etc. But just the thing is that at this point in time, with the pressure that we are seeing in the Nigerian markets, we are a bit cautious, and we won't recommend a buy rating on Bajaj at this point in time. But yes, Hero we are positive on.
All right, we'll leave it there today. Thanks a lot, Ashwin, for joining us. The pre-open has settled, and it's actually not as bad as the SGX Nifty. The point I was making was, let's see if it sort of holds out that 17,475. Give or take 25 points here or there, the 20-day exponential moving average, which has been the big support for the market for some time now. And then we take it from there. The Bank Nifty is starting about 320 points lower. So, Darshan, if we open here, which is slightly better than what the SGX Nifty has been telling us, how do you approach the index and what's your 9-10 call?
I would still not take the buy on dips opportunity today. I would avoid the index completely. LTI is an intraday short with a stop above 45.44.
LTI is L&T Infotech. So, Darshan, thanks for that. Mitesh, same question to you. If you open here, do you trade index and do your 9-10 call?
I think around 17,420, 450, maybe slightly lower. I think I would still be tempted to take a long trade. But for the timing, Bajaj Auto, it was a sell yesterday. Now I'm giving a fresh sell here. That's a sell with a stop at 39.76 for targets of 38.35.
Okay, I don't know how you knew that. You perhaps preempted the next thing that we're focusing on, which is Bajaj Auto. Now, Nitesh talked about a sell on the technical side. CLSA has downgraded Bajaj Auto on the fundamental side as well. They've lowered the target price by 8% to 4,343 versus 4,677 earlier. It's the challenges in the export market that's making the street very cautious. Remember, the African markets are facing a lot of issues because of a dollar shortage. And Bajaj Auto gets 60% of its exports from Africa itself. We have reported how Nigeria has restricted movement of two-wheelers as well, and that has hit Bajaj Auto's numbers. CLSA is forecasting a 16% decline in motorcycle exports for FY23, so perhaps some pressure there. But it's not Bajaj Auto alone. In the month of August, the entire two-wheeler market has seen a hit in exports. Bajaj was down almost 30%. Hero, it's a small base for them in exports, but TVS Motor was down 15% as well. And in Nigeria alone, the retails were down about 25 to 30%. So that's on our radar.
All right. So we'll keep an eye out on Bajaj Auto. But Abhishek is joining in to tell us what Morgan Stanley has to say on banking names. They're talking about a second leg of re-rating. Abhishek, morning.
Morning, Nigel. So as you mentioned, Morgan Stanley has written a note on the banking sector wherein they are saying that brace for second leg of re-rating cycle that is taking place across banks. So they say that improving capacity utilization is setting the stage for capex demand to come back in FY24 and 25, which could be one of the reason of a second leg of re-rating. So bank stock re-rating cycle works in two legs. So Indian banks appear to be in the phase 2 or in between the two transition phase. So they have also said that expect loan growth to accelerate and be sustained as capex spending accelerates. So they have raised their loan growth estimate 16% for FY24 and 17% for FY25. Along with this, the lower credit cost and could lead to better earning upgrade for the banking sector going ahead. So ROE also could get a boost on account of better earnings. Large banks, both private and state-owned banks, they stand out and appear to be better placed in terms of gaining market share due to the acceleration in the loan growth. So they believe ICICI Bank, Axis Bank, Bank of Baroda and SBI are well placed to capture the upcoming growth that is seen in this sector. So they remain selective on mid-sized bank like Federal Bank and AU Small Finance Bank. And the key risk they mentioned is the slowdown in loan growth and the slowdown in deposit, which could hurt the banking sector. Back to you.
Okay, Abhishek, thanks a lot for that. Mitesh, any word on Federal Bank?
I've been liking the stock. It's made a fresh high, and we've had buy calls when the stock was trading around this 110, 108 odd levels. It's done the near-term target, but I think the longer-term chart suggests that there's still significant upside left over here. So I think any declines closer to about 115, 116 would be medium-term buying zone for me. Would recommend a stop of about 107 over here, and I think 135 to 140 should be the next target. It's not a very high stock. Yeah.
Okay, Mitesh, got it. Thanks a lot for that. So that's on Federal Bank. Just about 10 seconds left for markets to open. My sense is at some point maybe the mid-cap index could actually trade in green as well. I mean, whether it closes there or not, but the impulse is to buy the dip. The first rates are in. The Nifty is down about 130 points. 123, so nowhere near as bad as the SGX Nifty told us, but let's still give it some time, maybe around another 5-10 minutes. The Bank Nifty is opening about 300 points lower, and the mid-cap index is actually opening about 0.5% lower. Let's see how things move. In terms of individual names, the Nifty, by the way, is down just about 110 points or so. In terms of individual index names, Bharti Airtel is weak. It's down about close to 2%. IndusInd Bank is down. Infosys, Tech Mahindra, HCL Tech, these are few stocks which are down. Kotak Mahindra Bank is the other one where we've seen a bit of a weakness. HDFC, M&M, HDFC Bank, Reliance, these are few other names dragging the market. TCS also a bit soft right now. On the upside, you have Coal India, which is up about 2/3 of 1%. Nestle is up about 0.5%. Asian Paints is up about 1/3 of 1%. But that said, on the Nifty, you still want to give it some time because sometimes it takes about 5 to 10 minutes for the market to find the first equilibrium. For now, you'll have to say that that 20-day exponential moving average is holding 17,475. That for me is line in sand now on a closing basis, but even on intraday basis will be interesting to track. And the Bank Nifty is down about 280 points. What about the broader market, Sonia?
It's not bad at all. It's outperforming the frontliners. The mid-cap index is down just 60 points and now is entering into flat terrain. If you look at it, CG Power, there was a large deal there. So that one is up 2.5%. Dream Folks, the new listing is up 1% after the big move that we saw yesterday. Coal India is up almost about 0.7%. Some of these banks are doing well. You have Federal Bank, Ambuja Cement from the cement space doing well. Ujjivan Small Finance Bank is up almost about 3% Dish TV has been inching higher. So I'm just talking about the ones that are bucking the trend right now, stocks that are well in the green at the moment. A couple of other names, fertilizer names that we spoke about earlier. FACT is up 2.5% at the moment. You have something like a Campus Activewear that's in the green. ICICI Lombard is up about 2% or so. Some of these paint companies are doing well. Indian Hotels continues to charge ahead, so up almost about 0.5% there. And some aviation companies like Interglobe Aviation are also holding up in the green. Now the market is cutting its losses rather fast. So you have the Nifty as well, which is down just about 100 odd points. And in the broader markets too, it's not bad, just about trending into the green as we speak.
Well, that's right, Sonia. A few stocks that are doing a relative outperformance include some of these crude sensitives. You have Interglobe Aviation that's up close to around 1% odd. Couple of other names, Berger Paints as well has moved into the green. That's up close to around 1%. Defense stocks, they're in a world of their own. HAL is one of the top gainers in the F&O space, up close to around 1%. And as Anuj said earlier, I think the mid-cap index has already moved into the green. So that was a possibility. And that's precisely what's happened as well. Even from the broader markets, a few stocks, that are seeing rather large volumes in the initial trade itself. You have DCW. That stock has seen big volumes, more than 1 million shares changing hands out there. CG Power has now moved into the green. And Ambuja Cements as well, after yesterday's good run, seeing some follow-through buying as well, Anuj.
Absolutely, Nargis. I'm tempted to say not surprised at all. The mid-cap index, first one to hit the green, and the Nifty. On days like today, you normally see the SGX Nifty low getting respected. It's all about the risk-reward. Let's see if there's a second dip, because that's always a risk. By the way, just keep an eye on a couple of names. ICICI Lombard, we were discussing this. There was a large chatter of a block deal here, so I think people were short here. But that hasn't happened. Could still happen, of course, we don't know, but at least maybe today it's not happening. So there's some evidence of short covering over there, maybe. But the Nifty is actually quite okay for now. Krishna Kumar Karwa is Managing Director at MK. Is now joining us. Krishna, hi, good morning. Thanks a lot for joining us. What is it that our market is so confident about in the wake of the kind of risk-off which is visible in the global market? I mean, it now looks almost certain that the US market is perhaps headed towards its recent lows, but our market is well above that. And in fact, we are very close to our recent highs instead of recent lows. Your thoughts?
Yeah, I think if you look at it, first of all, the domestic investors, I think they have been very resolute and consistent in investing in the domestic markets. I think if you look at the steady inflows which are there in the mutual funds and even the direct investing which is happening. So the confidence levels, one is under penetration which is there with the domestic investors as far as equity is concerned. I think they believe that the growth of the economy, etc., we are kind of oasis in this whole turmoil which is there in the global world, where US is under pressure, China is under pressure, and Europe is also struggling. But our country, with its domestic consumption being so strong, plus I think the policies of the government as far as encouraging manufacturing and the PLI schemes and also thrust on defense manufacturing, I think all this together is creating a very positive sentiment as far as domestic investors are concerned to invest in our markets from a medium-term perspective. And we have seen that despite the massive selling that from FPIs, which was there in the month of May-June, but domestic investors did not falter. They continued to be positive, and a fifth of buying by the FPIs in July, August, and we see that the indices are almost near their highs. So it's clearly the domestic investors' confidence which is driving the market.
Okay, domestic investors' confidence driving the market. Mr. Karwa, good morning. I remember when we spoke last month, you had highlighted that, there's a big tailwind in the banking sector with respect to a big pickup in credit growth. Earnings have also looked good and valuations are attractive. The sector has seen a huge rally since then. But at the moment, is the risk reward still favorable for investors in private banking? And what about PSUs? Do you have any confidence there?
Definitely, I think the whole banking space, yes, it has run up in the last few months, and there could be some consolidation, but the tailwinds are definitely there in the whole sector. I mean, the credit growth itself should be very strong. Balance sheets of most banks are also very strong, and they are in a position to lend. And rising interest rate environment obviously is much more profitable for the banking system. As far as risk reward is concerned, possibly the larger banks, they are very well discovered, and larger private banks, they are very well discovered, very well owned. They will definitely do well, but it will be the second tier private banks and maybe some of the public sector banks also, which should deliver maybe excess returns versus the large private banks. So I think investors should look to diversify their exposure in the banking sector and move from the top banks to maybe tier 2, tier 3 banks across market caps and across ownership structures for better returns. I mean, when there are tailwinds, then it is the smaller guys or the mid-sized guys who will possibly give you better returns from a capital market perspective.
On the banking names, then you're suggesting the tier 2 banks could be the ones in focus from now on. Hi Krishna, morning. Thanks so much for joining in. Well, what about from the cement space? Clearly the street is factoring in that the second half of the year is going to be much better. Quarter 2 is going to be a washout. Out there as well, would you be looking at the mid to smaller cap cement companies, or would you go for the larger names that are likely to get bigger and are likely to be on the prowl, picking up these smaller names?
So I think that is a sector which is going through consolidation and will continue to consolidate. I think it is better to stick to the larger names in that sector, and maybe some of these large mid-cap companies which have all India presence and ability to be participating in the consolidation. I think we have seen that the smaller cement companies which are regional based, I mean the valuations may look attractive, but markets definitely believe that it is the larger players who have pan-India presence who will possibly give better returns. And yes, I think second half of the year is expected to do much better for these companies as input pressures, etc., come off and realizations also inch up.
Well, just one look at the market, it tells you once again that it's clearly the domestic economy stocks which are doing well. Cement is doing well, telecoms doing well. By the way, there was one block which got executed on Bharti. Maybe that's the reason it was weak in the morning. I think that's now beginning to pick up. It's been one of the stronger stocks, of course. So that's beginning to make a bit of a comeback. NMDC, so many stocks doing well right now, and the mid-cap index is now comfortably in the green, advanced decline at about 2:1. Now, Krishna, in the broader market, we're beginning to see some unusual moves, right? Is it par for course, or are you getting a bit nervous about the kind of moves we're seeing in the mid and small cap space?
See, whenever retail participation increases, you're bound to see the breadth of the market increasing, and maybe some of the small cap and micro cap names also outperforming. But if you look at it from a one-year perspective, the small cap indices are still underperforming the large cap indices. So there is still scope for the broad market to do well. But I think what you say is right, that you need to be very, very careful and vigilant as far as investing in small and micro caps are concerned. There could be some ramping up, etc., which could be happening in some of these names, and investors should be careful. So yeah, I think there have been some sharp moves, sometimes maybe not supported by fundamentals, and I'm sure the smart investors would use to exit such stocks if they are stuck in those companies. So yeah, we have to be very careful. But I think what is happening is that there are so many micro sectors where you see tailwinds coming in, and maybe the first rush, some of these stocks move up and then consolidate, and investors understand the story, and then there is a second round and third round of movement. So some of the sectors like capital goods or EPC companies, etc., or even microfinance business. So these are sectors which are small sectors, but you see many tailwinds in developing in these sectors. So maybe the stocks are reflecting that.
Okay. You have been very bullish on the entire auto space, and you said that there is still a bigger leg up left despite the rally that we've seen already. There are several pockets here. There's two-wheelers, four-wheelers, commercial vehicles, there's auto ancillaries which have done exceptionally well. Where do your preferences lie?
So within that, I think we believe that the commercial vehicle space, I think there is a decent tailwind in that segment, and coming out of 2-3 years of consolidation, as the economy picks up volumes, you should see a good pickup, and stocks in that sector should give better returns. In two-wheelers, we believe that niche players should possibly do much better than the market leaders. And passenger vehicles, we continue to be positive. And so basically the whole sector, we believe, yes, it has given 20-25% kind of return over the last 6 to 9 months. But still, it's early days. There could be some consolidation, but from here also it should deliver superior returns and outperform the benchmark Nifty.
All right, Krishna, what about the chemical space? Specialty chemicals did very, very well for the last couple of years or so, but those stocks have come off the peak. Now, some of the stocks have re-rated as well. How much more juice is there out there, or do you believe there are select specialty chemical themes that would continue to do well from here on?
So, yeah, I think what is happening in specialty chemicals is that currently now you're realizing who are actually doing specialty chemicals business, and many of them were possibly kind of commodities, but were getting rated like specialty chemicals. From a medium-term perspective, the sector offers phenomenal growth opportunities, and we have seen some of the majors announcing massive capexes for the next 3 to 5 years. So from a medium-term perspective, these stocks do offer good investment opportunities. I think as far as the PE re-rating is concerned, that probably has been done with. So many of these companies are discounting, say, 2 years forward at around 25 times and 20 to 25 times earnings. So there is no scope for re-rating of this sector, many of the companies. Earnings growth, yes, some of these companies are capable of growing by, say, 25 to 30% for the next 3-4 years. So, yes, you can be good compounders from current levels, but you'll have to really search now for those multi-baggers in the segment. I think the segment has been well discovered.
Okay, well, look at Lombard now, ICICI Lombard. I was highlighting that as a stock to watch. Because there was this chatter of block deal, discussing it with Nimesh as well yesterday. It may still happen, of course, but at least in the morning it didn't happen. So yesterday's shorts perhaps are covering. The market, is in the green, but normally on days like today, there's a second dip as well. So you just want to be a bit cautious about that. Krishna, what about the insurance space? It looked like a bit of a compounder 2 years back, but over the last 2 years, there's been, quite a bit of worry. Of course, maybe LIC's listing didn't help, but overall, your thoughts on life, general, are you buying these stocks?
I think the segment has gone through a consolidation. I think during COVID time, many of these companies struggled with excessive claims, and the growth also in premium income, etc., was not as expected. But I think the price corrections have happened in most of the sector across the board. LIC listing is also behind it from a sector perspective. So from these levels, looking at the overall valuations and the growth prospects, be it life insurance, be it general insurance, I believe this is one segment that should be invested in. Do you think that these can be multi-baggers from here? Possibly no, but can they give you 15 to 20% compounded returns over the next 3 to 5 years? Definitely. So investors who don't have exposure to this segment should look to invest in some of the leaders, both in life as well as non-life.
Okay, well, Krishna, we'll leave it at that. Thanks a lot for joining in and speaking to CNBC TV18. Have a great day.
Thank you very much.
Thanks a lot. Okay, that's the word coming in from the market master. The market, by the way, is not bad at all. It's cutting its losses, especially the mid-cap end of trade that is now trading in the green. And plenty of stocks actually across pockets are looking good. One space that we're going to focus on now is the tractor industry. Companies, in fact, their stocks have hit 52-week highs after recording a growth in August versus a double-digit fall in the preceding months. M&M tractor sales in August were up 1% year-on-year versus a fall of 14% in July and a fall of 13% in June. And M&M, of course, has other tailwinds as well. They have a brand new electric vehicle launch coming up in September, the XUV 400. So there's so much excitement about that. Rajesh Jejurikar, the Executive Director, Auto and Farm Sectors at Mahindra and Mahindra, joins in now. Talk about that. Mr. Jejurikar, hope you're well. Thanks for joining in on the show. Before I talk to you about tractors, I have to ask you about the EV, the XUV 400 that's launching this month. Are you on track with it? What kind of production are we looking at? And what are the initial estimates?
Sonia, you're going to have to wait a little bit around that because we do the reveal tomorrow evening. We have a whole plan chalked up on how we're going to get customers to engage around this product over the next few months. So wait and watch it. It goes live tomorrow, the reveal, tomorrow evening, 7:30 p.m. India time. And I think it'll be a very, very fun experience. So we'll just hold back. It's not too far away from now, so we just hold back. More on that starting tomorrow evening.
But I couldn't contain my excitement given that this is, the first EV. And of course, this whole range has done exceptionally well, right? The XUV range. But coming back to that later, on the tractor side, after 2 months of a degrowth, we're finally seeing some pickup. But there's a lot of volatility in the industry, especially with the way the monsoon situation is panning out. So I wanted to understand from you, what are you noticing on the ground? Do you think this single-digit growth is something that you can continue over the next few months?
Yeah, so I'm going to break the question into two parts. One is understanding the underlying factors impacting the industry, and the second is specific comments around the group that's happened so far. So first let me take the second part, which is our growth in June and July. I don't think that's really the right way to look at the data, because last year, the April and May months were impacted by COVID, and we then saw a big upside in June. This year, the sales have been even through, and Q1 saw a very, very healthy growth across April, May, June. Now, June was obviously a correction, and you have the data coming up on the screen. I can see where you saw the big swing up in April and May, and then June and July in a way corrected for that. So we still have a healthy cumulative growth when you look at the industry. We are at around 8-9% growth. So I think that's, in the tractor industry, looking at any 1 month in isolation never really gives you a perspective on understanding the industry. So now to the first part, which is what are the underlying factors impacting industry. The April-May saw a benefit coming out of the wheat exports, which the government had permitted. That kind of got withdrawn, and there was some impact of that. What we are seeing in the last 2 months are a few positive drivers. One is the monsoon has been by and large very, very good, except for 2 or 3 states in the east, which are seeing a deficit. Overall, monsoons have been extremely positive. The second positive driver is government spending in rural India, which had been very slow for the first 4 months or so, has started kicking in. So we are seeing cash flows improve in rural India on account of that. Thirdly, the prices in the mandi are higher than they have been in the past. And we have been in the last few months talking about a negative terms of trade for the farmer, and we see that reversing as well. So, as we get into the festival season, we would look at it with optimism. We have said that we should end the year for the full year with a 3 to 5% growth.
Okay, hi, Mr. Jejurikar. Let's focus on the tractor space itself, since we're focusing on that. You're the market leader in the tractor space, but a smaller player, if you look at the VSC tillers, they're going for a professional CEO. If you look at Kubota, they in fact, are trying to be a little bit more aggressive. How do you think things will shape up? Are you confident that you can hold on to that market share?
Yeah, even this year, Nigel, we've gained a 0.9% market share cumulative April to August, and we gained market share last year as well. So we continue to be very strong in this space. We have 2 brands, Bajaj and Mahindra, both strong. Several new products and offerings coming up, which have upgraded our technology. So we are very positive about our market position and our market momentum.
So you're saying that you're holding on to this growth guidance for the industry, right, of 3 to 5%. Don't you think you can do better, considering that the monsoon situation is picking up? As you said, government spending after a very long time has picked up. Or are you just being conservative?
Sonia, in the tractor industry, it's very hard to take a longer term view. And when I'm saying longer term, all the way up to March. But our view at this point of time remains the same, similar to what we had a month back, which was 3 to 5% growth for the industry. Depending on how the festival season actually pans out, we may take a fresh look at that growth estimate sometime in the month of end of October, after the festival season, early November. So we'll wait to see how that happens. But right now, there are several positive indicators.
Okay, all right. Let's talk about utilization levels then, Mr. Jejurikar. Tell us what is the current utilization levels, and let's break it up into PVs, CVs, as well as tractors. If you could give us a brief number out there. Demand will follow, but I just want to understand current capacity and utilization levels that you're functioning at.
Yeah. So Nigel, we have said that I'm now talking about the SUV space first. In November, we are planning to put out a capacity ramp up that we will, execute over the next 12 to 18 months. That would give a stronger perspective on how we're adding capacities on the SUV side. Clearly, we are using all our capacities on the SUV side. We have a very large waiting period, and we're doing everything possible to bring that down. You've seen numbers move up even month on month as we are improving capacity utilization. New products are coming in, and some of the supply challenges that we faced in the past are getting, we're overcoming those challenges. So that's on the SUV space where we are using everything that we have. We have a large wait period, and the endeavor is to bring that down as quickly as possible. In the CV space as well, we've seen a very strong momentum in our pickup portfolio. We've launched a new small city pickup a month back, which is again seen very good momentum. We've had a pickup growth of over 70% in April, August this year, and in that segment we are a very, very strong player with over 60% market share.
Okay.
So in the commercial vehicle space as well, we have not only are seeing a good demand momentum, but we are also seeing a very strong growth. I'm not giving a specific number on capacity utilization. On the tractor side, we just spoke about that, and we've announced that we are setting up a new plant for Swaraj, which will come up sometime in the course of next year, and we are at a fairly high level of capacity utilization on the tractor side as well.
What about on the margins for tractors? In Q1, your tractor margins fell to a multi-quarter low, is sitting at around 16% or so. You had done 18-20% margins for a very long time, and now that commodity prices have cooled off, you think you could get to that level anytime soon?
Margins are impacted by commodity prices going up, of course, and you're right on that. We've said that the effect of reducing commodity prices takes time, because we maybe have an opening inventory at a certain price, and then there is contracts which we have, which has protected us when markets were going up. So we would hope to see some effect of that come on this in the second half of the year. But the one thing that we have to keep in mind is when revenues are high or per unit selling price is high, and we haven't been able to pass on the margin on the material cost, what we have been able to pass on in a phased manner is the actual material cost, then you lose a margin as a percentage, because you haven't added the margin completely on the material cost. So right now, when commodity price inflation has been like it has been over the last 18-20 months, in the range of 17-18%, it's not been we haven't been able to pass on the margin on top of the material cost itself. And if you don't do that, then you start seeing a couple of percent impact on the margin, just on account of the fact that you didn't add the margin to the material cost increase. Does that clarify something? So the couple of percent difference you see also comes on account of that.
No, I didn't get the number. By the end of FY23, what are we looking at in terms of margins, considering that now, on an average, 16-70%, you think is something that will last through the course of the year?
Unfortunately, we don't give guidance on margins, Sonia, so I'm going to avoid having to respond. I would have to avoid responding to that specific one. But again, going back to fundamentals, commodity prices will ease off, and we are taking several actions to manage our costs. But that being said, there is the effect of the margin on the material cost itself, which hasn't got passed on, so that does affect the margin. When you look at it, doesn't affect the absolute profit, it affects the margin.
Yeah, Mr. Jajurikar, you had mentioned about the tractor industry growing by around 3 to around 5%. You maintain that as well. But various reports indicate that the dealer levels, at the dealer levels, you have tractor levels, the inventory levels are rather high. The various factors that are being cited is uneven distribution and the likes, and some price increases as well. Could you clarify on that? First of all, have you taken any price increases, say in Q2? And also, if you could tell us, what are the inventory levels at dealers?
Yeah, so we have taken a price increase in Q2, and we're taking some right now at the moment as well. On on the specific question of inventory, Nigel, inventory normally, the pre-start of the season, there has to be an inventory build-up. It always happens that way. This time the season starts early, so 26 September is when Navratri starts, and that's the peak selling season. This time we get Dussehra and Diwali both in the month of October. So typically it is very common to build inventory up at this time because there the customer is not waiting. You have to have inventory on the ground to manage the demand that comes in. So it's the inventory buildup at the moment is not out of norm. It is the kind of inventory that we would have getting into season.
Okay, all right. And the price increase you said, could you quantify it?
About 1.5%.
1.5%. Okay, we can't let you go without asking you about the hot segment, right? What's happening with SUVs? And you've done exceptionally well over there. Just wanted to understand, have you gained market share in the utility vehicle segment? If yes, what is it right now? How much was it, say, about a year ago? And what is the order backlog currently?
Several questions there. So yes, we've gained market share. We measure market share in two ways. We measure volume market share, which is the SIAM definition, where we gained about 50% market share this year. We are the number 2 player by volume in the SUV segment now, where we were number.
Sorry, I didn't get the SUV market share. How much did you say it was? How much have you gained?
It's about 4 points.
4%.
We're close to about 17%.
Okay.
That's the volume. But we've also started measuring revenue market share, and we do that based on price data that we get from Jato Dynamics, which is a very well-renowned global data analytics firm for auto businesses. And as for the revenue market share, the last 3 quarters we've been number 1. The reason we're focusing on revenue market share as well is the average selling price of our products is significantly higher than some of our competitors. And we think that we should be factoring that into how we review and target our performance. So last 7 or 8 months, we've been number 1 by way of revenue market share in the SUV space, and number 2 by way of volume market share. So even if you look at volume market share, we are a significant player with a small gap between player number 1 and number 2. By way of the order backlogs, we will start deliveries of Scorpio and starting 26. As you know, we have over 100,000 orders there. And if you look at the rest of our portfolio, we have over 100,000 orders there. So it's actually a very large order book when we look at our SUV portfolio. All the brands are in very, very good demand.
Okay, well, on that really optimistic note, we'll let you go. Mr. Jejurikar, thanks a lot for stopping by and speaking about various businesses of the M&M Group, and all the best with the new launch that you have. The XUV 400 electric vehicle will be unveiled tomorrow, so we will get you more on that as and when it comes through. It's the big launch that the street is awaiting. But let's cut across now to the finance minister speaking at the US-India Business Council Summit. More on that coming up. Let's go across.
The Indian economy offers a great lot of opportunity for the next 75 years. Second, India's demographic strength, a demography which I like to upfront say is not the demography of 50 years ago, of 100 years ago, of 200 years ago. A demography which was only labor, manual labor, labor which were during the imperial labor era shifted mercilessly into plantations far away from home. They were also not the early 60s migrants who were labor who went seeking jobs elsewhere because they couldn't have the job here. Today it is not that labor which is the demographic strength. The demographic strength of India is twofold if I look at it. One, they are skilled, high-end, technically savvy people who are giving solutions to the world for digitizing their economies. They are the people who are giving solutions to the world on very many health-related issues. They are doctors, pharmacists, scientists. They are the people who are launching rockets. They are the people who today before you are coming up with solutions for a futuristic world. So it's not labor which is the demographic strength of India. It is the skilled manpower which is also very adept at moving from one level of technology to another without causing major disruptions to the existing framework wherever they are engaged in.